Welcome to Framework Fortune. We are going to be doing a trading live Q&A. And as people are joining, welcome to the stream. I hope you guys brought some questions this time for me so I can actually answer some questions. Whatever you guys need help with or need better understanding or clarity on, you guys just let me know and we'll cover it. We'll do the stream for about an hour unless it takes a little bit longer, but just let me know. Start asking your questions and we'll dive right into it. I'm just answering. John Zadar may be joining us on the live stream here in a few minutes, so I'll kind of be on my phone back and forth. But whatever you guys need help with, you need help understanding support and resistance better, how to control your emotions better, whatever it is that you need help with, I'm here for you on this stream. I'm not going to be going off on any rants like I did last time, so hopefully you guys got some questions for me. Yeah, so Michelle, you're having issues. Let me get this clear so I can the better I understand what you're asking me, the better I can explain it. So, like I said, John Zadar may be joining us in a few minutes here. So, is it just resistance that you're having problems with? Or are you asking about the moving averages or my drawn resistance line like this downtrend that's on that I have on the SPY on both charts here? All right, I don't know if John's going to be joining us or not, but I'll be back and forth between that. But anyway, is it just all the resistance, or like what exactly are you having issues with? Because that's what I want to address. I want to address exactly what your problem is, so that way that we can figure it out a lot easier. Because I could do a whole basic support and resistance lesson if you want me to. But if it's one certain thing that you're having an issue, I'd rather just address that as much detail as possible to give you a good answer for what you're looking at. And anybody else, if you have questions, go ahead and start asking them so we can get rolling. All the lines that I have. Okay, perfect. So we'll go into this. So first off, let's ignore the 5-minute chart. This is the 5-minute. Sometimes I'm on the 2-minute. You guys see me switch back and forth charts on that bottom one. So we're going to ignore that one first. So our daily chart, which is over a year span, right, is going to be showing us the most information. It's going to show us more information than the 5-minute chart. Because the 5-minute chart is only going to be showing us 5 minutes in the last 5 days. So we only have 5 days worth of information. So we're looking at this like a stream of information, right? So the longer we go back, the more information we have. So if I go to a max chart, you can see the SPY all the way back to 1994. Then we have a whole lot of information we can look at, right? And so these lines that I have on here, these are moving averages. And moving averages and it depends on the type of moving averages. There's exponential and simple moving averages, and then there's some other crazy ones. But those the main point of it is, to me, I use them as support and resistance. And there's a lot of stuff out there with moving average crossovers, and you can buy when the 9 crosses. All that is just overcomplicating it to me. Just use it for support and resistance. That's all you really need to use it for. And if you're swing trading, you're looking basically at support and resistance still, and looking at the price action of which way the chart's going. But all these moving averages are averaged of the price over a certain time frame. So this 9 one right here, the green one, you can barely see it because it's just really close on this one. The 9-day moving average is over 9 days averaged out across this whole year chart for the last prices. So you see, since it's only 9 days, the actual moving average stays really close to the candles, right? But then you see the blue, and that's the 50-day. So that's a little bit more information. And you can see it's backed off a little bit from the candles. And then the yellow is the 100-day moving average. So that's even more information. So you can see it's even further backed off on the SPY. And then the red is the 200-day. So that one's going to have a lot of information. And a lot of traders use the 200-day as support and resistance. So this one, because it's the most information that we have out of all these, is going to be the strongest support and resistance. And it just goes in from there. So red, 200-day is going to be your strongest. 100-day, less information, is going to be the next strongest. 50-day, less information, be the third strongest. And then the 9 EMA is going to be your weakest support and resistance, right? So we go to a year chart, and we're looking at the SPY here. So the SPY has been it's been pretty bullish the last year. We know that. Back here was March when it crashed last year during the pandemic, and it was below these other moving averages, right? You see the ones that were more information, the 50-day, the 100-day, and the 200-day, they're way up here, and the 9 one is right down here because it's less information. It's going to stay real close to those last 9 days as it rides around. So you can see right here when it first come up, and I'm actually going to go to another stock because the SPY is kind of hard to use to do this because the lines are pretty much the same all the way around. So let's go, let's see, maybe DLPN's a little too crazy. Let's see, what was the big gainer today? Yes, okay, this will work. But yeah, I hope I'm answering your question so far as what they are. They're just averages of the price and that information you're getting. But I use them, like I said, as support and resistance. So if we're looking at this daily chart of PRQR, I could take off all these, and I'll show you. I'll actually take them off. I'll show you exactly why that I do this, and then I'll put them back on in a second. Whoops, the 9 is not off. Let me take the 9 back off. But I'll show you exactly why I use them like this, because it makes it a lot easier. I could sit here and look back for past chart resistance and support. So when we're looking for that, we're looking for resistance. We're looking for a place where the price kept getting hung up at. So we can see there was 2 days where it got hung up right here. And if we start our line right there and we look across, we can see right through here, you know, in this area, I could draw this line here. It's around like what? Let's see, 680-ish. Kind of 675, somewhere like that. But you can see where these candles hit there, these candles hit there. This one almost came up to it. This one almost come up to it. But you can see we have candles there. So actually, we can draw another resistance right across the top of those candles, because those are price points where the price could not break through, right? And right here was actually a little bit of support for these candles as they came back down. So we know we have all this resistance through here. Where else do we have resistance? Where's a lot of other candle tops hitting at? So right across here. You know, we draw our line and right across here like this. Well, if Thinkorswim will work with me, there we go. And we can see where all these candles hit these resistance lines there. So we can keep doing that to find all these resistance lines. Or I can go in and add in my moving averages, and you'll see after I do this that some of these resistance lines that I drew will actually be marked by these moving averages. So we're going to do we got the 9 up there. We're going to do the 50. And the 50 I always like to be dark blue, so I can see it real good. Ooh, let's see, my 9's a weird light blue color. We don't want that. We want a green. Okay. Oops, forgot to change the color. Very important to make sure you color these the right way. You don't have to color them the way that I have them colored, but on a lot of charting, that's usually what the colors are, so that's why I do that. Why do we have 2 blue lines again? What's going on here? What did I do? See, okay, got green there. Got blue there. Oops. Okay. Yellow. Okay, so for some reason those didn't automatically change. Let's go with that orange red there. So now we've got all of these lines back on here of the moving averages, and if you look at where these lines are at, where the stock got hung up at these prices, what do we see? Right here, we see this one where it got hung up at was coming close to the 200-day moving average. So there was a lot of selling pressure below that because the 200-day moving average is a lot more information, so it's a lot stronger resistance. So it couldn't even get up there. There was already sellers sitting there. Because remember, we're trading people. So you're looking at it as support and resistance. And all support and resistance is a price area where people are going to be buying, if it's support, or they're going to be selling a whole bunch, which is resistance. So just by seeing this 200-day moving average, I don't even need this line here. I can take this one out, right? And we can see there, too, where this candle came back down. Both of these candles hit the 50, and they got hung up on the 50 right there. So we know that little area right there is some resistance. So we take that line out. We don't really need it right now. We could use it still if we wanted to. We could put it back in there. But then let's go to the next line. And you see what happened there. In that area where this line's drawn, the 9 moving average is there. And in the same thing right here where this line is drawn, you got the 200 up there, and then you got the 100-day acting as support right there. And then you've got this line again coming up and hitting the 200-day, which was resistance. So we really don't need this line anymore. We can take it out. We know it's resistance, though. I mean, if you need to keep drawing lines, draw your lines. But we don't quite need it as much because we can see. So it's going to be the same thing with this one. You can see where the moving averages are at and where a lot of the resistance and stuff was at without having to draw those lines out. So that's why I use them as support and resistance, is because it's more efficient than sitting down and drawing every single resistance and support line out. HCMC. So that's pretty much it. It's pretty much as simple as that. And you can just see, and I can go to any stock, go to any random stock, and you're going to see where these moving averages act as support and resistance. You see, candle hit there at the 200-day, 3 different candles. None of them could close above. 200 was too strong. Same thing there, resistance. 200-day was too strong. Same thing here. 200-day was too strong. Same thing here. 200-day too strong. And then finally, you got a candle that broke above the 200-day moving average and closed above that resistance. And this stock actually went on a run. When it got above it, actually it gapped above it. Sorry, I'm looking at that backwards. It gapped above it and got a big, nice run. See, before, when it was below that resistance of that 200-day moving average, it had a few pops, but it never really had a nice breakout until when it finally got above it. And then you did have this original one here, but look, it had to break through the 50, and it got hung up at the 50. And then it had to break through. It kind of gapped up here over the 100, and then it finally broke through this 200-day, and you did have a move from $10 up to $17.39. So that's what I use those for. Just support and resistance. So hopefully that answers your questions. If not, we can, or your question about that. If not, we can come back to it. What the hell happened to my chart? Why is my volume bars way up there? That's weird. The spider web chart for. Orlando, I'll get to your question next. Let me check and see what John said. He's messaging me. And then, of course, you can use those moving averages on your 5-minute chart or 30-minute chart or whatever you want to use it on down here, but you don't necessarily have to. Like a lot of times I trade naked charts. And you'll see me draw lines on these naked charts on the 5-minute. So like right here, we saw it come back up to the same area in pre-market. This was the pre-market high, and it hit right here. So we can go ahead and draw that line right across there, and we know that's a resistance area where that candle hit, pre-market high is always resistance, hit it again, bounced off, came back up, tried to break above, but you can see where it got rejected and ended up pushing back below it before it finally broke out again, and now it's back at that resistance line. So when I'm drawing these, all I'm doing is connecting the tops of candles or bottoms if I'm looking at support. So same thing right here, we can kind of see right in this area several candles, and as the day started, we can see that was kind of the low in pre-market. That was the lowest point of price in pre-market, and then it opened up, dropped to that point again, and then bounced off, right? And if we look back up here at this daily chart, what do you notice on these lines that I drew? Because when I draw on this chart, it'll show up on this chart, but what do you notice? What's right there? We've got the 9 EMA almost perfectly exactly where this line is drawn at. So that was support. And then we've got the 200-day drawn right there on the top of the chart. And where's the, oh, see, there's the other line. 200 right a little bit below there, but then this other line kind of hiding from me there. But if I take and I extend that line, it's a little crooked. It's extremely crooked, apparently. Let me redraw this. Maybe it won't be as crooked. So it is a little crooked, but that's all right. But simply enough, if I extend it to the left, you can see where this line was resistance. Up on the chart up here, it was support, right? Because this candle hit there, and both of them held above it. So it was previous support, so that old support became new resistance. So if you're new to support and resistance, you got to understand that previous support, old support, can become new resistance and vice versa. Old resistance can become new support, right? So hopefully that gives you a much better understanding. Like I said, if you still need some help there, I can go over. One more other thing I'll go over, because I do draw these a lot as well. You'll see me draw downtrend lines. And it's the same premise. It's just support and resistance. But it's just sloping. That's the only difference. So I draw that there. This candle hit here. These candles hit there. You know, this one almost made it up there, but didn't quite do it. And then it went all the way down, and then when it came back up, it hit right here, got rejected again, and hit right here and got rejected again. So this downtrend line is just acting as a resistance line. And that's why when you get a cross over a downtrend line, when the price gets above a downtrend line, you usually get some type of breakout to the upside, whether it be small or big. You know, you really never know, but it depends on where the next support and resistance lines are at. Okay, so we got a little spammer in here. Where's one line? Anyway, so hopefully that helps you get a better understanding. But yeah, if you haven't watched the support and resistance video like Orlando was saying, I have a very good. Well, I'm not gonna toot my horn like that, but I have a pretty good video explaining it a little in more detail. But it's pretty much the same exact thing that I'm just saying. Just simplify it. Use them as lines that where you have a good idea where people are going to be selling a lot and people are going to be buying a lot. It's really as simple as that. All of this extra terms of 50-day, 200-day, just make it simple. The 200 days farther out, it's more information, so it's going to be a stronger place where people are going to be buying or selling at, depending on where the stock's at. So, Orlando, you said when you have multiple red days, do you change your complete game plan or adjust it? If your game plan was working before you started having the red days, so if you were having, 2 weeks straight of wins with your strategy and your plan that you're sticking to, if for some reason you do start losing, figure out why you are losing. And you guys hear me say it a lot. Like today, what was it I traded? DPW. Yeah, DPW. So why did I lose on this play? Well, I got in looking for this little breakout right here, but I ended up buying real close to the top of the breakout. And when it didn't break out right there, like I said in the live stream, I could have got this as a little scalp, but I didn't. But we know that market conditions were sketchy this morning. I mean, I was saying it before I started trading, and then I just went and ignored that. So depending on market conditions, whether the market is up or the market's down, that's going to give you an overall kind of weight to the market. Let's see here. All right, so John's going to be joining us here, so you guys can get a little perspective from him, because me and John are both different traders. And then One Life, well, I don't know if One Life's here. Yeah, One Life's here, and DB is in here as well. So you got a couple of different experienced traders to get some different perspectives and stuff from. Let's pop up John here, see if we can get him on here on Skype. I'm going to put my headphones in. So anyway, back to what I was saying for Orlando. If market conditions changed and you were winning before, then all you need to do is just let's see. Whoops. There, I'm getting John right now. Okay, so John's about to join us in just a second. There we go. There's John. Let me get him on live stream real quick. Let's see. There we go. So, all right, we got John on the live stream here. John, how's it going, buddy?
Brilliant. Can you hear me?
Yeah, we can hear you pretty good, I think. Everybody
Good,
can hear
good.
John?
I'm going to turn you up.
Okay. All right. Talk for me for a second, John. Let me make sure your volume's not too loud on my side.
ABC, 1, 2, 3. How do I sound to you and me?
All right. I think we're good there. So the question we're tackling right now is we have a question about when you're trading, if you have multiple red days in a row, do you change your strategy or do you stick to it? And what I was in the middle of explaining is like it depends on market conditions. So the overall stock market, if the stock market's going down and you're doing a breakout trading strategy, well then that strategy is not probably going to work if everything's dropping. It's going to be less likely to have a breakout.
Absolutely. That's predominantly what's happening right now, I think, in the market. And that's pretty much the strategy I'm playing in this market is a breakout strategy. And many are following me just because of the strategy I'm using was working a month ago, but not so well right now. And they say, should I get out? And basically I say, you can't look at the company. It's not one company. It's not 5 companies. It's all the boats on the water. I mean, pretty much. Now, of course, you've got big markets and little markets, which react differently to news and stuff, the OTC and the major markets.
Yeah.
But I think you stick to your guns unless there is something really, a real change in the market, something that's changed drastically. But if it's just an overall sentiment, stick to your guns. The more often you transplant, the less growth you're going to get.
Yeah, yeah, exactly. So basically, what you're saying is if you're constantly changing your strategy, you're not going to be consistent at one strategy because you're always changing
Right. It's like going from one president to the next. How much are getting done?
it. Good analogy. Good analogy.
Sorry.
Yeah, no, no worries. Good analogy. But yeah, so with day trading especially, we saw the SPY this morning. It's had a big sell off. So in this type of big sell off, those breakout strategies might not be working. So most trader as a new trader, you do want to stick to just one strategy so you can become consistent at it. Just make sure your stop losses are tight. So even if the market conditions are not in your favor, at least the stop losses will save you if something happens. Or even better, if you're noticing it's not working in these type of market conditions, don't even try to trade that day, or go to paper trading and just practice. So that way you're not risking your real money in a choppy market like this. But as you evolve as a trader, you will get more strategies. Like,
Exactly. You do. It's like
yeah,
playing chess. You have a strategy that you initially start with, but you have to constantly keep changing strategies if you're playing a good player, and you have to be prepared to do that. I mean, today was a hard market. The market went down a lot today, and then it started to recover on the big side, but the OTC side was not recovering. But I was able to make advantage because the prices were so depressed that many of the stocks I was holding went down below prices I thought I was going to see them. And most of the time that would cause most to panic. But I see it as an opportunity. A lot of the stocks I'm in aren't just day trades, they're long swings, and I'm just waiting. And why not grab more and bring my price down on days like today if I can manage some dry powder? I had to sell a few things off today, not at the best prices, but they were wise decisions. I made some
mhm,
good plays. So, that's about the best you can do on a red day is pick up something cheap.
yeah, yeah. There's always in these red days. That's the thing. You can find some buying opportunities, and to
Oh,
the day trading side of it, instead of looking for breakouts, a lot of times you can find dip buys uh, to
right.
make some little profits. So like APOP today, went on a nice little run at market open, and then it came crashing down for a while. Well, once that downtrend drops, you could have just waited and waited for the downtrend. If I can draw this damn line, there we go. You just wait and wait for the downtrend to break over, and once it breaks over, you just buy right there, and then you could have got a nice little 50, 60 cents off of that trade. So it's a different strategy. So you don't want to like give up your strategies. If your breakout strategies are working for a couple of weeks while the market was hot, keep that strategy and keep trying it. But start to maybe incorporate some bounce plays, some dip buys, or bounce plays off of trend lines, stuff like that. You
And
know
I'm
that.
sure they're talking about current market conditions probably. And let's face it, it is across the board. There's a lot going on right now with laws, with Biden's first 100 days. We got stuff cropping up with oil, stuff popping up with China. There's a lot going on, and the market itself doesn't know what to do. So you shouldn't be making decisions if they're not making decisions.
Yeah, yeah, that's a good point because it is very sketchy right now because all across the board, not just across the board in the stock market, but across the board of all investments in precious metals, cryptos, everything yesterday, and cryptos are rebounding a little bit today, but especially yesterday, everything was red. There was no safe space. You couldn't go to any market to hide from it. So, that when it's like this, you just got to protect your capital. So when you do get in those hot markets again and you're using your breakout strategy that works, well, as long as you survive and protect that capital until the hot market, well, then you'll be able to come into the hot market with your strategy that actually works and make a bunch of profit. That's why you want to
Yeah, there's no need
capitalize.
to complicate the matter by selling and taking a loss, and then a week later watching it come back up and rubbing your nose in it.
Yeah,
I mean, A rash decision normally has rash repercussions. So stay calm, relax, stick to your guns. If there is no major change in the company that you're invested in, remain calm, hold your guns, and your strategy will probably play out in the long run. Patience is normally what is needed for most plays.
Yeah. Yeah, patience is the big thing, and then if your entries or something like that are bad or something, or your emotions are taking control, that's why you got to have that discipline and actually stick to your plan, and that will save you a lot of headaches and losses.
Yeah, rules are definitely something I've had to develop. I didn't have rules, and I mean they're important because even when you make a rule, you come to the point to where because you made it, you feel you can break it and you don't have to honor it. And you're just hurting yourself. You made the rules because you've seen the advantage to having them. And when you play the rules and abide by what you've already worked out in your mind, normally you come out ahead. It may not be the big dreams you have, but it is the solid gains that you need consistently to grow.
Yeah, yeah, exactly. And then Michelle, you asked, can you lose all your winnings very quickly? What exactly are you referring to? Are you talking about penny stocks and sub pennies like John Moore trades, or like the stocks I trade? Or are you just asking in general as far as the stock market? Because I mean, in reality, you can lose all your money quickly no matter what investing you're doing, whether it be precious metals, stock market, cryptos, whatever. It's not hard to lose money in the stock market, that's for sure.
No, today I actually had a stock that fell. I mean, it blew my mind. It fell 99.8%. I had $450 in it, and it fell to $1 today. $1. Um, you know, that's as close as you get to losing all your money. I would have normally answered that question no, unless the company goes bankrupt. You just got time on your side since it is an asset. You can hold it as long as the company is legitimate and, doing business. Um, but yeah, you can lose it real quick. It's just about selling it.
Mm,
Obviously, I didn't sell my stock today for $1. So I've lost value, but I haven't lost my money because I haven't cashed out of this deal yet.
yeah, and that was probably not a day trade though, was it? That was probably a swing or a longer term hold.
That's just something, yeah, that's a long swing. I
Yeah,
have quite a lot of, those hit and miss. When you're looking for a breakout is not something that's normally timed. It happens when you're not looking. And the best way to catch a breakout is to have more than one horse in your corral. I like to have as many horses as I can and find that Mustang. And hopefully once a week I find one Mustang out of a whole herd of horses. It's the best way I can play it because I can't predict the future. So I just hold a lot of them, and when they take off, I split them. I clone them. If they double, triple, quadruple, as penny stocks do, take out my money, leave some there, go buy another one exactly the same way, and get another horse.
yeah, and I want to clarify too, just to be sure, because with day trading, a lot of times you don't want to hold the bag on the stocks that you're day trading. Like uh,
Sure.
a lot of penny stocks that get a lot of volatility in them are usually garbage companies, and I'm not talking about just the OTC. I'm talking about even on the Nasdaq and NYSC. I mean, they're on there for a reason. They're not complete trash, but these smaller price companies, a good majority of them are going to be really susceptible to pump and dump schemes and all of that
Absolutely. I
stuff.
was looking at the list of most active and the gainers on penny stocks. If you go to otcmarkets.com, they have a current list that's constantly updated. And I was amazed when you pull up the gainers for the day, and I mean everything from 100% to 49,000%. Most of them were stocks in bad health. They were yields or stops or skull and crossbones, which means they're late in reporting. Their information is not coming in, and those are the ones getting the most gains. Those are the ones getting the most trades, getting the most money. Now, I don't know exactly why. Wild, Wild West, you want to ride the horse that jumps the highest? I'm not quite sure. But the fact remains, you're right. That's where most of the money goes, is in the volatile stocks.
Yeah. Yeah, and then Michelle said she was doing very good, and then she noticed that you can lose your winnings very quickly. So that goes back to the discipline. You want to have those tight stop losses if you're day trading, because she's more asking of day trading than swinging or long
Yeah, if
term.
you're, there's definitely a difference between day trade, swing trade, and long trade. I mean, there's all differences. When I day trade, I don't look to see what the fundamentals are in the company, what their
Right.
financials are, their revenues. I don't care who's managing the company. I don't care if you just got out of jail for drunk driving.
Yeah.
I honestly don't.
Yeah.
What
Exactly.
I care about is, are they rising? Is the stock rising today? Because today is as long as I'm going to be in. So whatever happens today, I'm in it for that long and that's it. If I'm in it for a swing trade, I'm normally looking for a catalyst. I'm
Yeah.
looking for some piece of news or some piece of action to occur in a short amount of time. And a long hold, I did look at everything. The people who manage it, are they quality characters? I look at the fundamentals
Right.
and then I speculate. How far do I think this is going to go? And that one, you don't worry about the bumps and the jumps and the days. You don't worry about it. You just put your money into it, buy it on the dips, keep adding to it, even if it's rising, because if you wait for it to get cheaper, it may never get cheaper if you
Yeah.
picked a good stock. So just keep adding into it. And in 20 years, you'll be happy you did. But they're all three different. So
Yeah.
on a swing trade, I may take a bigger loss because I expect a bounce back. On a day trade, I want out fast because it may not bounce again for 6 months. And that's a bag.
Exactly, yeah, and you don't want to be bag holding on day trading these stocks. So you want to have those tight stop losses
You do.
to get you out of the trade if it does start to turn around on you, especially in
And they're
momentum
tight. The
trading.
stop losses are tight. Tough to pull in penny stocks because you can't read the static, how far it goes down and how far it goes up. The charts can look beautiful, like it's going to go up, and just like that, it's
Yeah,
coming down.
yeah,
So
that happened to me on DPW today. I got stopped out. It was starting to look like it was going to break out, and it had a fake out breakout, and then it ended up dropping down, and I got stopped out. And then later in the day, it actually rose about 20 cents, 20 30 cents higher than where uh, it was at when I bought into it. So I got stopped out on it, and I didn't get to make all that profit. But it's better. It could have just turned around.
probably not a good thing to admit, but I rarely use stop losses. I pretty much monitor everything and I make a lot of mistakes, but it teaches me a lot too. It really makes me pay attention. But as you said, it looks bad and then 30 minutes later it's taking off again.
Yeah,
And I would rather be the one to make that decision than to have myself get kicked out, especially on a cash account. I have a cash account with no margins. And when I spend money, it takes 3 days to clear it.
yeah,
If I sell that today, I cannot spend that money again. So I can't buy back in if it bounces up unless I have more money
yeah,
sitting on the side.
exactly.
So I can't play like a person with margins and play a bounce 3 times in a day and make money. I get one shot at it.
Yeah.
So I normally don't put in stop losses because I get bumped out. That may be my play for the day.
So you're basically saying you kind of use mental stop losses, like you don't put in an actual stop loss. You just have a price area in your head to where you're going to sell if it happens to drop that low.
Yes and no. That's a factor that's always there. My risk factor. How much can I bear to lose without kicking myself before I go to bed? The other factor is, what is the market doing? I want to know, is there volume now? Has there been volume all day? Has it just taken a break? I mean, if it's been at millions and all of a sudden it's gotten calm, I'm not going to think the water's turned off. I'm just going to ride out the sideways action or the dip that tests maybe the 20. Now, for me, it's about reading the text on the charts. If I see a break at 200, it come down past the 20, down past the 200, I'm out. Because what's the hope of it coming back now? It's got to fight to get through at 200. I mean, if it just crests under, yes. But if it goes down, that's game over unless you're in a swing play. For a day trade, that's game over. And I should have been out before it did that.
Yeah, yeah. We all make good and bad choices. We're all humans, and we're competing against robots and big money. Especially in the Nasdaq and NYSE, where you're at a lot of the times in the OTC markets. It's pretty much more, I would say, more free market-ish to where there's not huge hedge funds that you're competing against. I'm sure there are some hedge funds that
Right,
come
it's
into
more
there.
head-to-head
Yeah,
competition rather
exactly.
than me against AI.
Yeah, exactly. So that, which I don't know if that's better or not, because people are hard to predict a lot of times. Because we're
I find it very difficult. I mean, the market sentiment is one thing. It has no emotion. But you throw that emotion in there with people, which is what I really think has happened now with the COVID and all the new investors coming in. You brought in investors who are not investors. They're not even traders.
yeah,
They're just people who are spending their money in the market, and they've brought all their emotions with them. Look at what happened during that COVID crisis when the oil crashed
hmm,
and it went minus.
yeah,
I mean, it went
yeah,
minus. It recovered so quickly because the new investors seen an opportunity, as I was talking about, a fire sale. Look how far it fell. Let's get into it. Where the hedge funds would not have played it like that. And we brought it right the hell back up when it really should not have come back that quick. But that was the excitement of emotions, of catching a deal, fear of missing out, which is not what you get with hedge funds, fear of missing out. They don't play that card.
no,
So I think the emotions has changed the whole way the market is now because there's more people bringing that to the game. And we have to deal with it. People panic faster, they get greedy faster.
hmm,
There's just more of that on the table now to deal with.
yeah. You've got a lot of retail traders, and especially in the crypto space. The crypto space is the hedge funds are just now getting in. So the crypto space has been wild, wild west for a while, where you're really just trading people. Like you're not trading against any. Well, I guess in the crypto
And
world, there,
24/7 too, not
yeah,
not even a break.
yeah, and you're trading globally around the world. Let's see
Right?
here. So let's see what some other questions we got here. Uh, looks like Daniel B said he agreed with you on something, and then he said that you are trading completely like trash. So, John, I don't know if you want to defend yourself against Daniel B. You don't have to, but
Well, I don't know exactly what he's looking at. I mean, what, my whole bulwark? Does he know that much about me to actually judge, or has he just heard bits and pieces of things I do? You know, we all trade, we all date, we all eat, and we do it according to what our preferences are. As my grandfather used to tell me all the time, in matters of preference, there is no debate. So, he has his opinion. That's okay. I'm the one that pays the bill, not him.
there you go. Great fucking answer. How you like that, DB? Not everybody
It's
is the
okay.
same.
It's all right, brother. You've got your opinion. It's okay.
That was a great
It
answer.
stinks, but it's okay. Nothing personal.
Right. He's asking what kind of stocks are you trading, and I mean I've said that probably several times this stream already, but he's trading in the OTC markets, and just because you don't trade in the OTC markets doesn't mean that there's not money to be made there. There's anywhere that there's money being moved around is a place where you can make money. That's all there
Well,
is to it.
if you consider that just last month in February, over 20% of all the market money was running through the OTC. Now, if there can't be money made with 20% of all the market's money, 1/5 of it down in the OTC, where penny stocks jump 50, 60, 80, 100, 300%, you don't get that from stocks up in NASDAQ. You're not going to get a $5 stock going up to $50 on a regular basis, or a $50 stock going to $250, but you will in Pennyland.
Yeah.
It takes a lot more. My brother-in-law moved from the big markets down to the OTC, and after 2 weeks, he says, "How do you take the stress?" He says that it's so stressful down here. All the volatility, and you can't count on the charts. You can't predict. You have to be on your toes, and you can lose it like that, and you can gain it like that. It is a whole different ballgame. It is the wild, wild west. The sheriff isn't on the street. The SEC is changing a lot of rules now to get a lot of those crummy companies off the market that shouldn't even be there anymore,
Yeah.
by making information public for all brokers, so brokers know whether to give a quote for it or not. So there's a lot of things changing right now, and I don't think any two people dance the same. I don't think any two trade the same or do anything the same. We're all unique.
Yeah, I agree. Everybody's brain works different, so you can't expect everybody to trade the exact same way. That's just not logical. or even possible. Like, because a lot of times I'll hear people say, well, I took this course and learned all this stuff from this guy, and I was watching him live making profits, but then I tried it and I just could not get any wins. And it may be that his courses are fine and his trading is fine for him, but for you, you might not think the same exact way, so the trading is going to be a little bit different for you. So,
And strategies, it's like playing football.
right.
You call the wrong play, you're in the wrong place when the ball's moving over there.
Yeah.
You got to have the right strategy. You got to have the right risk management for your situation. Just because this guy's spending $200, per company or $2,000, that doesn't mean you should. Just because you have $2,000 doesn't mean you spend every penny of it on this stock. Do you know how many shares you should be buying for your risk factor?
Mm-hmm.
People don't even know there's an amount of shares I should buy. Yes, you only want to lose $500. Figure out your stop loss where $500 is, multiply it out, get your share count. Everybody trades differently according to their own personal circumstances, and nobody else knows them but that one person.
Yeah, exactly. And you gotta, and everybody's going to adapt different too. So there's definitely a lot of different ways to trade. In the OTC market, that OTCmarket.com video you just put out on the channel,
Mm-hmm.
I didn't even know that site existed, but that brought a whole new world of OTC trading, opened my eyes to a whole new world of OTC trading, because that actually gave some clarity into the OTC markets where you can actually find
Right.
legitimate information. Because that was
That's
one
the
of my
problem with the OTC market.
exactly.
There's not a lot of transparency. There's a lot of smudges on the windows, and you're not sure if it's in the building or on the window.
Yeah,
You
exactly.
need to know the difference.
Exactly. So that was good. I appreciate that video you put out, because
Good.
that's a lot.
I've gotten a lot of feedback on that. It seems a lot of people are like you. They weren't even aware the market that.
A lot of good information, and that's the biggest thing with the OTCs is it's hard to find good information, and that's actual information from the overseers of the OTC market. So that's definitely a great tool to have on your side.
Yeah, it is.
So looks like we don't have any other questions at the moment. Does anybody have any more? Let's say I see somebody they just put in Nathan Rumble. You just put in HCMC.
Oh, HCMC. Yeah, that's it's a small cannabis company that has been at the top of the charts for volume for, I don't know, a month, at least a month. Every single morning it's at the top. Every day it's at the top. And at the end of the day, it's still at the top. Now, of course, I'm talking about share volume. And that's because they've got 102 billion shares in their outstanding share count. And I do believe the float is 101. So there's a lot of shares there. You would expect it to move. It had a good strong bounce a while ago. Right now, look, all the stocks right now are pretty tempered. There's not a lot of breakouts, and it's a rare occasion that you get anything moving strong right now.
Yeah.
We are in a lull. HCMC is probably going to move again. There's a lot of little tiny penny stocks that have had volume that aren't doing anything right now and got everybody scratching their heads. It's not the company. It's the market sentiment. Just relax and be patient.
Yeah.
It is going to change.
Yeah.
As a matter of fact, I don't know if you heard today on Bloomberg, they've been saying it for a couple of days. Even the president himself said it today. They expect 6% growth in GPD over the next year. 6%. We normally get just over 2%. They are expecting 3 times as much growth in the market the rest of this year, 9 months, 4% next year, and over 2% in the third year. Folks, the government expects a surge of business. We're coming out of our houses. We're going to work. We're eating. We're going on vacation. We're buying cars. We're using our credit cards even if we don't have money. There's lots of money already been thrown out there. The government's given us so much money. The markets are flooded with money, flooded with all sorts of new technologies, innovations. The EV market is soared a decade ahead of time schedule because of COVID. These next 9 months, this next year is going to be something. Think of this as a tsunami. If you've ever seen a movie or a picture of a tsunami, the water on the beach all disappears. It all sucks back out into the ocean, and your beach goes out a good half mile. You could walk out there because the water is gone. That's what's happened now. Our boats are all on land. We're looking at rocks going, why am I down here? Man, when that water comes back, it's coming back with a mountain. And we need to be prepared for that. You're going to hate yourself if you evacuate your holds now just to see something in 3 months blow up. It's Bloomberg. It's not me. That's not an opinion. That's them. So I would just say it again. Stay calm, relax, stick to your guns. If anything, I would suggest you average down. Buy more.
I am going to disagree on most of that. I think we kind of talked about it before.
That's okay. That makes for better conversation,
Yeah,
don't it?
absolutely. I think the market will rebound eventually. I mean, the market hasn't even crashed yet. It's
No, it
speculation.
hasn't. If you look at it, it's pretty up. When you look at from COVID, we're not down. I
No.
mean, we were stuck at 269 on the QQQ for months.
Hmm.
We're at what, 345 now?
I'm not exactly sure. I've got the SPY pulled up at the moment, but let's see. No, QQQ is at 311. It's been pulling back.
Right, but it was at 269 for a long time, and it did get up. I agree, we are bouncing, but we're not crashing. We're not receding. We're not going down. It just isn't everything we're hoping for right now.
Yeah,
But
I
none
think
of it is.
I think that we are heading for a crash, and this is why I disagree with you. I think Bloomberg and especially the government is wrong, and especially the Federal Reserve is wrong. Now they do have a lot of information, more than I probably do, and a lot more tools than I do. But the reason the market has been so up since March, and that's exactly what you were saying, a lot of money has been printed out and pushed into the market. The Federal Reserve itself has bought stocks and bonds and all of that. So a lot of this is an inflated bubble. And when this bubble pops, the market's going to come down hard, but I don't know how hard it's going to come down because they do have the ability to halt the entire stock market now, since I think they put that rule in 2016. So I think we're heading for a nice pullback, and I don't think it's going to be the end. I don't think everything's going to crash to the bottom, but I do think we're going to see some pretty low lows here soon. Because even with all the positivity that could be coming out, like you said, that tsunami, uh, I think it's going to take more time for that to recover. Because when you're looking at GDP, they're saying that 6% GDP is the expected rate for this year. Well, how much of that GDP is just GDP that's returning that was lost because of COVID? If 3% of
A
that,
lot of it is new. I mean, did you watch the president's speech today?
I did, and I had a hard time watching it. There was a lot of stuff that he said that didn't make much sense to me.
Well, I just listen. I can analyze later. I just listen. And the point is that they're going to be pumping money into bridges. We have how many bridges? They're going to be pumping money into schools. How many schools? They're going to be pumping money out. And he says he doesn't care how much he has to spend.
That's what
Well,
worries
that's a
me.
lot of jobs. That's a lot of jobs. That's money in the pocket. And as far as I'm concerned, the people now, the market is being more controlled by people. I'm not saying we control it, but with the influx of the retail investors, we are a pressure that must be contended with now. If the game situation with the AMC and game, if that didn't show that we have enough power to move the markets, and I think that's what's going to happen. I don't think we're going to let the market fall. I mean, I realize it's not always in our control, but normally it takes a serious catalyst of negative recourse. If we were to go to war, well, there's nothing you can do about that. Chances are it's going to fall unless you're investing into weapons. But
Yeah.
I think the market is going to surge, not in a matter of surging. It's going to constantly grow with some serious bounces, a lot of volatility, big waves, but they're all going to get bigger because we have so much that the world is trying to get to. We're shooting for goals now, flying cars, EV cars, medicines. I mean, the money he wants to put into biotechnology and medicines, that's good. I'm glad to see we're pouring money into real science. As he says, what are we, number 85 in the world now? 85 out of what? 256 nations? Something like that. It's it's embarrassing. How can you call yourself the number one nation when you're 85?
Yeah.
So I'm
Well,
glad to hear that he wants to put money in, like China. Start spending on your country like a business would. Invest in your own business, invest in your own country. Quit investing in the 1% elite.
and this
Quit
is
investing.
you're not wrong on that part, but this is where our perspective is different. I think it is plausible to spend money on the economy and investments like you're talking about in the technical sector when, just like you said, a business and businesses invest in their products and their research and all of that. The government can do that too. The problem is we're $30 trillion in debt right now, and there's no money to invest. The money that they would be investing is more money printing, which is going to bring the price of the buying power of the dollar down. And when that happens, the prices of everything goes up. I think we've got rough times ahead of us before everything starts to really actually rebound, because they've been printing money since 2008 and the to bring the markets up from the housing market crash. And all this, the whole stock market is an inflated bubble from them. COVID popped the bubble, but they were able to come in and reinflate the bubble again. And I just don't know how much they can keep on doing this. Like the only
I
other
don't think that
countries,
we're going to see that this printing of money has any effect. You know, the fact of the matter is people spend money. Look, as you said, 2008, they've been printing money. I'm still getting a gallon of milk for a little over $2. And that's been 12 years, 13 years now. Gas is still about the same price it was back then. You know, things aren't going crazy. We have more pressure in the world, but monetary value is pretty much standard across the board, and it is just increasing slowly, the way it should. And I don't see that anything we're doing anymore is going to change. As you said, we're 30 trillion in debt.
yeah,
Well, Japan has a debt to us that would take 1,000 years to pay if they worked 24 hours a day, 7 days a week for 1,000 years. It can't be repaid. We can't repay the Federal Reserve all the money we borrowed. That debt is not to China. That debt is not to Arabia. It's to our own Federal Reserve Bank, the strongest percentage of it.
yeah.
This is not, we need a jubilee. Nobody's ever going to pay this debt off. And the fact of the matter is, as far as I can tell, they all know it. Every government knows it. And it's like when you're going bankrupt and you know you're going bankrupt, you go on a spending spree. You know it's all going to be taken off, so you just go spend and you go have yourself, you run that credit card up having a good time because it's all going to be wiped off anyway. So who cares? That's the way I honestly see it. Nobody gives a damn about the debt anymore because it's not retrievable. We're never going to get it. So let's just act like it doesn't exist.
Yeah, see that's we're on the opposite side, and this is the big debate right now of pretty much every major economist.
Well, I'm glad we're making
and
a video of this because in 1 year we can watch this back
yeah,
and
yeah,
see how it went.
yeah, we'll see who was right or wrong. A little friendly competition there. I like it.
Yeah.
But yeah, I could go on all night about this and back and forth, but there's other questions and stuff we've got to get to. But for sure,
Good. Some more questions.
for sure, it's something I don't think we're both going to agree on, no matter how long we go on about
Don't need to agree.
it. Exactly. So I don't, there's
I'm not married to you.
yeah, yeah, yeah. So I disagree with you, but we'll see what happens. That's the thing, you never know. And so far nothing drastic has happened, like you said, as far as in the markets.
Yeah.
To me, it just looks like it's getting to that way, but I could be very wrong. You never know. That's the whole thing with this. It's all speculation, and but that's if you are looking for economy debates, the debate that we were just having, you can find that literally on any economy channel or anywhere else, and you're going to get the side that I was given and the side that John was given, and get the same information in more depth. So not really a need for us to go back and forth on that one.
No, I think we touched it enough.
Yeah, so Michelle said, how do you go about finding what stocks to look for and might be good to trade for that day? That's it. That is a pretty newbie question. The biggest thing that I do is I scan with Thinkorswim in the morning, and I've got if you watched my Thinkorswim video setup, then you saw how my scan was set up. And sometimes I don't even scan. Sometimes because I've got the top 10 NASDAQ gainer list up and the top 10% NYSE gainer list, and then my momentum scanner, I don't really even have to make a scan in the morning. I can just look over here and see where the volume's at and what the floats are on these stocks, and then look at their news and figure out, is this going to be a good trade? So what I'm looking for a day trade is I'm looking for volume. Number one thing is volume. If there's no volume, that means there's no money in it, and it's going to be hard to get your money into it.
If there's no volume, there's nobody there to buy your stock or sell it to you.
Exactly. It's going to be harder to get in or out of that stock, and it's more than likely not going to do anything, especially not go up. So
volume's number one.
Yeah, volume is definitely number one. And then the rest of it is kind of strategy. Like my price range is 50 cents to $20 is where I like to generally stay. But John, you go down into the 000s and stuff like that. Some people day trade Apple. They got to have a lot of money.
Well, I'll definitely trade a NASDAQ stock. If there's something, like I jumped into AMC. When AMC started going crazy, I'm looking for volume. I'm looking for hot plays. I'm just down in the penny markets because those are the ones that have huge surges on regular bases. But if something's going on upstairs, I'm upstairs too. I've got no problem trading bigger stocks. It's just there's not as big a gains up there. For the money I spend down below to what I spend upstairs, I get a lot more profit down below. But the risk is greater, and I know that. I go into it with my eyes open. The nice thing about trading up top is the money doesn't fall off like that in penny stocks. You can see it dribbling down. You can get the hell out in time. In penny stocks, the floor just falls out and you fall. And there's not a lot you can do in cases like that.
Yeah. Yeah. So depending on your strategy, that's what you're kind of going to look at is that price. And then the catalyst. What's your catalyst? Do you have a chart pattern? Do you have a big news press release that's going to come out to bring in volume? Because remember, we're trading people. So you got to look for something that's going to make other people say, damn, I need to buy that and I need to buy it right now. So if you see a press release that says FDA approval, well, more than likely, a lot of people are going to say, I need to buy that because they're going to have a product on the market, some type of drug, and we all know how profitable drug companies are. So you got to have that catalyst. And usually if you have the
also
volume...
check to see if there are any filings that day. If there's an 8K or a 4K, that means company material change. Did they add something to the company? These are things that most people don't look at in the news. They're looking for keywords instead of filings. They're afraid to look at the filings.
That's me.
I look every morning at the 8Ks. 4Ks and 5Ks are when insiders buy their own stock. That's another signal. There are sites out there that just focus on insider buys. There are sites out there that focus just on the filings. You need to get a list of these sites so that you can do your DD in a fashionable sense, orderly, and get the news quickly. You don't want to be the one finding out about an 8K in a merger through news that comes out 2 hours after the filing. Get the filings. Filings are very important. That is one of the primary catalysts in news, is the filings that they give to the SEC.
Yeah, exactly. So to recap that, you want to find your stocks with the volume, the stocks in your price range, and the stocks with some type of catalyst. And that can also be a chart pattern. If you're a technical, like I'm more of a technical analysis trader than I am a fundamental day trader. I don't really look at the 8Ks hardly ever unless it's like just out there in front in the news. What I'm mainly looking for is a chart pattern. I'm looking for a triangle or a U shape or, like I said, a trend line, something like that, to where those usually have consistent breakouts or it's a consistent buying point where more buyers usually come in at. So
a real good example today, I was looking, and I own a company, SIML, and an 8K came out. Well, I didn't see the 8K till after I saw the charts, and it had fallen 70% today. I had no clue why, and I went to the news, or at least the filings, and found out that they had joined another company in a merger, which you would think would be good news, Brewbuilt. and they were going to merge with them. But before the merger, there was going to be 150-to-1 reverse split.
Mm.
Now, had I known that prior, I'd have probably sold, because reverse splits in penny land always means the stock is going to fall. It's just the way it happens. But I didn't. And that's what it's all about, getting that information in a timely sense. And in the morning, you've got a little bit of time. But the thing is that the first hour can be very tricky. A lot of news comes out in the first hour. And what looks good right now can change so abruptly. And that's not penny stocks. That's major stocks. It can change very quickly. They think they call the first hour fool's hour. Not because you're trading on it, but because it can fool you. Just like that. 1 minute you think it's going to be a great day, and the next you're sorry you got up.
Yeah, it's a very volatile time in the market. And you know, a lot of times it could be a great time to make money, but it's also really risky. That's why a lot of times I wait till after the first 30 minutes of market open before I start trading, because I want
Lately,
everybody to
you probably noticed that the bounces are coming in the first 15 minutes of market open.
Yeah, I have noticed that. But still, I still like to wait and let everybody get all their little crazy heebie-jeebie stuffs out in that first 30 minutes. And then,
well, a lot of people don't realize that if a stock stops, like say today's Thursday, and I had a stock that stopped on a climb. It was going down, and then all of a sudden it started to climb, and the bell rang. Boom, stops. There's a bunch of orders that got put in there probably to buy it because they saw it climbing and they got excited. So they've been put in the queue. They've been put in a line. The next morning, when that bell dings, all those buys have to be taken care of. So there's that spike first thing in the morning from yesterday's leftover buys. After those buys come the real day, you know, or the profit takers, because it just surged, it just jumped, and nobody expected to jump. Why did it jump? It's the leftover orders from last night. So when you start to realize this, you can set yourself up and know that high that you see in 10 minutes, 15 minutes, that's it. That's the high for the day. Grab it and get the heck out of there. Don't be looking for a second bounce in the day.
Yeah, that's pretty accurate too.
Yeah, I know. I've been burned many times this last couple of weeks because I forget. After 10:30, it's a buying game. Up to 10:30, that's your only time to really sell for anything decent, at least where I've been looking.
Yeah, it switches too. Well, at least in the price range I'm in, every day it's kind of different. We'll have one day where we'll have one stock just rip insanely and everything else is dropping. Then we'll have some days where we're only getting like 10, 15 cent pops. You know, it's kind of just depending on market conditions.
And every day has no news, so there's nothing to really justify it this way or that way. It's just doing its own thing.
Yeah. So we got some more questions in here. Let's see, Michelle, you said, let's see, where'd it go? Actually, first, Jamie, you said that's why they say Bitcoin is bad. Are you asking about Bitcoin? Because there are some Bitcoin naysayers, but I
still.
Yeah, I know. There's still Daniel B is a huge Bitcoin naysayer. He is anti-crypto.
I used to be a Bitcoin naysayer until they hit 10,000. And then when they hit 50,000, I was eating my hat because I told somebody I'd eat my hat if they hit 50 grand. Holy cow, I didn't realize a hat could be so filling. No, I don't doubt cryptos anymore. I mean, when you look at cryptos, some of them are at 1,000,000% gains.
Yeah.
I ain't never seen a stock do 1,000,000% gain.
Trust
never.
Me. Trust me, I know. Once I got into it in December, man, I've got my crypto portfolios have grown faster than my stock portfolios, and that's, you know, I have a lot of dividend stocks and stuff. But
well, the neat thing about it is, again, it's 24/7.
Yeah.
You know, the other day you sent me some money through Bitcoin.
Yeah.
And by the time you sent it to me, it was 8 cents more.
Yeah.
So, you know, I love it. It's 24/7. It doesn't stop making us money.
Yeah.
Where the stock market takes breaks and holidays, for God's sake.
Yeah, I'm almost ready to start live stream day trading cryptos every day like I do the stock market stuff, because I can do that at any time of day. So I can still do my stock trading.
You could get up at 3 in the morning and go trade crypto.
Yeah, anytime. Who knows? I'm probably not going to get up.
It's not called day trading then, is it?
Yeah, well, I'm probably not going to get up at 3 a.m. That's for sure. But maybe later in the afternoon. Daniel B's asked a couple of times, how old are you, John? Not sure why he's obsessed with your age, but if
He's
you,
not obsessed. He's curious. What you doing with long hair at that age?
yeah,
I am 60 years old, believe it or not. 60 years old. 6 times 10. Born in 1961. When the Beatles became popular, I was being created. Thanks, Mom and Dad.
yeah, and then Daniel B saying news is manipulated. That's pretty accurate. There's a lot, especially in the OTC markets and the even the penny stock, Nasdaq, and
Which
NYSE.
is why I suggested the OTC Market webcom.com site.
Yeah,
They do not print anything but legitimate, factual news. They're not a site that gathers news. They're a site that the news comes to, and they disseminate it out. So you want to make sure what you're reading about penny stocks is real, because let's face it, that is where the scams are. The bigger stocks have real legitimate business people who don't need to scam anyone to make a profit. So go to otcmarkets.com, verify your information. They got a place to put in your ticker, and it'll bring up everything about your company, the finances, the quotes, the news, the filings, all on one page. It's not very fancy. It's not very pretty. It's even a little user unfriendly, but the information is legitimate and accurate, and you can rely on it.
yeah, but even on like Thinkorswim's, I've seen this happen a lot of times. Even with Thinkorswim's news on the NYSE and Nasdaq, some of these companies will put out bullshit PR and say, "Oh, we did this," and then come out 2 hours later and said, "Oh, we didn't actually do that. We're going to do that." You know what I mean? Like you'll see a lot of that from, and that's even in.
What, like a retraction? You put out something. We did a $50 million deal, and then they retract. Sorry, that was supposed to be 5 million.
Yeah, that type of stuff. Yeah, you see a lot of hoodoo like that. You know, it's not all the time. I mean, a lot of times the PR is going to be accurate with the news scanners that you're using, but
Penny
companies,
stock news in the TOS is really crappy. There's not hardly any real good penny
yeah,
stock news. It's old, years old. They're missing lots and lots of it. I don't know if they quit because they don't get the news for free. They have to pay to have this service brought in. And if they don't pay for it, well, we don't get it. And there's a lot of penny stocks that are crap, and I guess maybe they didn't want to do it. I don't know, but I don't trust the news for penny stocks on TOS. It seems empty.
yeah, yeah, yeah. You're right about that. The OTC markets, especially it's not great for news, but Nasdaq stocks, you will get all the news on those.
Yeah, yeah, good stuff there.
Yeah. Let's see. I'm trying to get through this. So Jamie, you were saying when we were talking to Fed, what was it you asked me about? It was the Bitcoin. Are you saying when the Feds were saying Bitcoin's bad? Is that what you're talking about there? And then Michelle, she said, "What is some of the best advice or tips for people just starting out day trading?" Uh, I would say number one best advice would be don't rush. Don't rush into it because the big narrative on YouTube and Facebook and Instagram where you got these guys who are standing in front of Lamborghinis saying, "Look at all this money I made in the stock market. You can get rich overnight." They're just blowing smoke up your ass. Now, you could get lucky. You could be one of those 1 in a million who invest in some penny stock and it explodes to like a Tesla level all of a sudden and you make a ton of money. That could possibly happen. But more than likely, that's not going to happen. So what you need to understand is that patience is what is going to be the thing that keeps you alive in the markets until you are consistent as a trader or
Well,
whatever.
patience with day trading is almost an oxymoron.
Yeah. Yeah, it's hard.
In day trading, it really, there's always more than one way to do anything.
Yeah.
Uh, with day trading, I would say first off, don't put all your eggs in one basket. My strategy is that I don't know. I don't know which stock is going to move, so why just count on one? I would rather take $200, a small investment, and break it down into maybe 3 or 4 $50 investments in smaller stocks. If I put $200 in one, I may have to pull it out after losing 10%. That's the other thing. If you're a new trader, set yourself some rules.
Yeah.
A real good standard rule that for new traders is the 20-10 rule. 10%, if you lose 10%, get out. If it falls and goes down 10% of what you've paid, get out. If it goes up 20%, get out. I know it may still be rising, but if you make the wrong decision and don't sell, you're stuck.
Mm-hmm.
But if you always take 20%, you can be wrong twice as often because you're only losing 10%. So you can be wrong twice as often as you're right and still be breaking even. Let the math help you here.
Yeah.
Stick to your rules and try to get something every day. It doesn't matter if it's 35 cents. Every day that you aren't red is a day you're ahead.
Mm-hmm. Yeah, that's a good saying. Um,
Another one.
yeah, you got a lot of good sayings. Yeah, I mean, I agree with that. You know, you definitely gotta set rules. Back to the patience thing I was saying too, as far as learning and everything. Like when you first find out about day trading, and I remember this very well. I was so excited that I found a way to make money where I didn't have to go to a 9 to 5 job and have a boss. And I wanted to hurry up and jump in the markets and start trading. Well, that's a huge mistake. You need to take the time to learn everything before you start trading with real money. And if you are going to trade with real money, only trade with just a little bit starting out, something that you can afford to lose. So if you've only got $50 that you can afford to lose, that you're not going to be emotionally attached to, start with that $50 and try to develop your strategy and skill and try to trade that $50 into $100. And if you take the baby steps first, it's going to help you in the long run. Because if you dive head first in there, you're going to lose money 9 times out of 10. And
Something I like to tell them, we're itching to trade. They want to buy something. I mean, they can't wait to buy something. New traders. I know that feeling.
mm-hmm.
So what I say is, go to your charts. Go find, there are lists around on stocks that are going to be in your price range. Look at the charts on those stocks. Find a stock that's been going up for 3 months to 6 months. A stock that has an uptrend.
Yeah.
Put your money there. That $50. While that is slowly growing, go learn how to trade. You've made a trade. You're making some money. Now go paper trade. Go do some fake trading. Do some learning how to trade, how to read charts, how to read 10Ks. While that first trade is making you some money. Then after you feel you've learned something, come pull that money out and start trading with it. Education is the most important thing. I wish I'd have done it. I did what you said. I jumped right in there and I lost a lot of hard-earned money. And it's not because I was stupid. It's just because I was ignorant. And there is a difference.
Yeah.
I didn't know.
Yeah, no, exactly. That's the same thing that happened to me. You know, I got lucky with a few cannabis stocks because that's what got me into the market. And, I hit pretty decent on them. And then I thought I was an expert. And then started losing money day trading and stuff, and was like, "Oh man, I'm doing something wrong." So
that happens a lot to people that have success early
mm-hmm.
and think this is very, very easy, and then overcompensate
mm-hmm.
and end up losing more than they gained.
Yeah, so that's why I suggest just start small, because this is not an overnight get rich scheme. This is a skill. Investing and trading are both skills that once you learn them, you're going to continually be growing those abilities and getting better and better at them, and they're going to stick with you the rest of your life. And if you don't like stocks, the same trading strategies and all that can be transferred over to cryptos or precious metals or forex or any of that. So it's just a skill. It's the same thing like if you go to school to be a carpenter. Right? You get out of school, you're a decent carpenter, but by the time you're 60, you've been doing carpentry for 40-something years, you'll be able to build a deck with your eyes closed. So the longer you do it, the better you're going to get at it. It's the same with anything. So it's
a small piece of advice, too, for new traders. When you get into a stock and you sell the stock, you have some profit in it. Don't sell all of it. There's no reason to cut the tree down that's giving you fruit. Let the tree continue producing fruit. Take your profits, take your investment out.
Yeah.
Leave some there, even if it's just that $50. I was just telling friends the other day, I did that. I don't remember how much I leave behind, but this one I did. I left $50 behind. And that was 3 months ago, and it's up to, I think, $13.50, $13.80 now. A measly $50 that I didn't take. And you know what the great thing is about it? Worry about it. I'm just letting it grow. And now that's the sell, unless they're going bankrupt. I never take all of it. Never. Always leave some. Look, I go through probably 100, 200, 300 stocks a year. If I leave a little in every single one, it's going to make me money, but the ones that behind it isn't going to kill you. Matter of fact, it'll probably help you.
Yeah, I actually never thought of it that way. I do, like with cryptos, because I am swinging most of these crypto positions. Then I'll take some of the profits out, and then I am, because I still think we're in a crypto bull market. But yeah, doing that with stocks, that person before say something like that, where
it's
just
pretty
leave a
common
little
in the
bit.
Cannabis realm. They call it working with company money. I call it leaving a profit. The opposite. If you've made money on, and if you can give it all the time in the world now because you're not in a hurry, it's not a day trade anymore. It's not a swing trade. You've made your profit. I did that today. I took 100% of my investment out and 100% profit, and I left 300% more profit in. Now, I left more in than I took out, but I've got big plans for that. It was a 001 stock, and when it hits a penny, I'll be making $5,000 for every penny it moves up. I can wait now. I got my money out until it makes me rich, and then I got 10 more behind it hoping to do the same thing. So it may be foolish trading, but the math is still the same for a fool as it is a wise man.
Hey, that's a good point. Agree with that. He's giving out a lot as well in the chat right now.
We like people who share.
Yeah. Daniel B's a very smart day trader. Smart, but he's stubborn and won't listen to anybody else but himself.
I'm not a very, but never sent me to school. And I had on real customers school and told me I had to relearn everything I knew, and everything I knew was wrong. That's a matter of opinion, isn't it?
Yeah.
Two things, and to some others, it may not look this very moment. It's been a bad month. And I'm sticking to my guns. As laws changing, the economy is pushing towards it.
Yeah, for sure.
I think it's just a matter of time, which is patience. So I'm being patient. A lot of strength for me to do. We put our money in. We hope. Be patient.
No, I agree.
Not really.
Yeah, I mean, basically everybody is.
That's it.
There's multiple ways to make money in everything. Just like with real estate. See, if you take out stock market and you can flip houses, which is similar to day trading and swing trading makers, and then you're turning around and selling that quick profit, kind of like a day trade. You can also buy a duplex and rent that out and have a cash flowing property. You can also buy commercial real estate and rent that out to businesses, or do what's it called when they're doing a new. I forget the term, but it's new construction, and they've got a lot, like a whole new building coming in, and investors poured into it, and
remodeling.
Yeah, kind of remodeling. There's a specific real estate term. I'm bad with remembering terms. With real estate, there's 100 different ways you can make money. So it's the same with every investing strategy. You know, there's people who just go short all the time, and they're making money.
There's 100 strategies that make you money.
Exactly.
And once you find and you can recognize and you can get ahead of, why learn? Even if it works for them, you found one that's working. Keep the one.
I like, how many wives do you need? That's good stuff. Well, is there any more questions? 10 more minutes here. We'll get going. Because a new crypto just popped up on Coinbase, but it's looking pretty rough. Exchange, I go and look and see if it's getting any buying attention, because last I think with Grumpy Cat coin, and it was like 0.000001 all the way up to 0.0001. That's a huge
900%.
Yeah, so it was a huge jump, and Grumpy Cat made some people really rich. So anytime I see, I got the notification from Coinbase right now. So here's the new ticker. But
in case some people video on it, 0001 or 001 or 01. It doesn't matter. When you buy it on the one, how far does it have to move to double your money? To 2. 1 to 2. If you buy it on 3, how far does it have to go? Past the 4, past the 5, all the way to the 6. Why buy it on any number when all you have to do is buy? It's really simple math. It can do a lot of the work for us. Play the math, because no matter what you say, all the stock market is about algorithms. All these graphs and technicals are lines representing numbers. You know, if you can just get this much more percentage on your side more often than they beat you, it doesn't take a whole lot.
And that's it. House all the time. You just need to beat the house a little bit more than they're beating.
What I'm trying to get math to do for me. I'm trying to get math to help me, you know, play the market so that's why I say investment into one stock.
Yeah.
You're going to hit out of 30,000 stocks that yours is going to surge today.
Yeah.
Now, of course, you buy 100 lottery tickets.
Or Litecoin. I would.
And DD takes time. Whether it comes from a friend, a